Welcome to the Asset Coach and Tax Strategist YouTube channel. If you're a subscriber, thanks so much for subscribing. If you're a first-time viewer, thank you for spending your time here with us. If you like our content, please give us a thumbs up. For you new folks, Asset Coach Tax Strategist YouTube channel is based on the book Economic Termites. This is a book that I wrote a few years ago talking about taxes, inflation, time, laws and regulations. Also, I wrote a second book called Farming Assets. Those two books is really what this whole channel is about, addressing those situations and how they affect you and I in our ability to grow our wealth. So as an asset coach and tax strategist, my name is Robert Wolf. I am the CEO and founder of Terra Firma Business and Financial Consultants and its affiliates. We have a bunch of companies that we've built out this ecosystem surrounding the basis of what we talk about on this YouTube channel. So if you're not a subscriber, hit that subscribe button. We drop episodes every Thursday. Again, if you are, thanks so much. And let's get into this next episode. So today's episode is really going to be somewhat of a refresher from previous conversations, but I think it's so important right now because there's so much going on with the government shutdown and really kind of what's happening behind the scenes that a lot of us common folks don't know what's going on. And so, and what is that? Well, as you can imagine, if you've seen the stock market, if you've seen gold, if you've seen crypto, if you've seen all these different equities markets, assets just skyrocketing and jumping up, and what is happening. And so this goes back to my book Economic Termites and what we've discussed previously of what we really need to focus on and how to build wealth. You need to understand that the traditional functions of how to build wealth are not traditional. These are the things that you and I hear that we're supposed to do, but what we need to do is kind of take a step back and look at what the wealthy are asking us to do. Well, not asking us to do, what they do, but what the IRS is telling us what to do, right? So let's go back to the Economic Termites book. What is that? It talks about those things that economically affect our wealth to deteriorate. And why termites? Well, because termites, you don't know the damage is done until they've revealed themselves, till you see the damage and everything's already occurred. So what are the main termites? Taxes, inflation, time, and laws and regulations, are politicians. Okay. And so these are the four major ones. Now, you've also heard me talk about what we call the 3 Ds, but there's actually 5 Ds. And we need to understand that how do we incorporate these 5 Ds into the economic termites? So let's talk about what those Ds are. Well, the first one's deductions, which is a business, right? The ability for a business to have deductions, which is what the tax code is written for. The IRS, the government, invests in business owners to create W-2 employees, taxpayers, to generate revenue for the government. The second D is depreciation. Those are physical properties that can be used within an asset to help that asset appreciate and grow and bring tax revenue. Assets such as real estate, equipment, oil and gas. The third D is distribution. And when we say distribution, a lot of people think of income. No. We're talking about cash flow. How do we distribute out of assets? How do we leverage assets? And that's the fourth D, debt. So how do we leverage out of assets, the appreciation, the equity in those assets, utilize the distribution, which is tax-free, and be able to help use the basically the most tax-efficient assets, business, real estate, other types of asset producing, appreciated producing investments or assets, if you will. And then the last one is decentralization. This is really where, yes, it's not just the crypto decentralization, but also you can use the terminology and maybe intertwine a little bit of the uncorrelation, meaning assets that aren't correlated, aren't connected to each other. So like most people that we talk to have a lot of their assets or their investments or their savings in stocks in the liquidity market. So how do we uncorrelate? How do we utilize other assets, alternative assets? And Trump's bringing alternative assets to light to 401ks. And I've done a video, an episode on that, talking about what's this look like? What do we need to be aware of as this goes through this process of understanding of alternative assets, being an accredited investor? All these things are connected back to these economic termites: taxes, inflation, time, laws and regulations, our politicians. Okay. So think about it. So all of our clients at Terra Firma, they're all accredited investors, meaning that their income and their net worth qualifies them as an accredited investor according to the Securities Exchange Commission to have access to alternative assets. Every single one of them. So when we're looking at that and we're kind of determining of how or what do we use to build cash flow, to build revenue, to build tax benefits, right? If you are able to reduce your tax liability legally by just following the tax code, and you're in a 35 to 37% federal tax marginal bracket, that means you're going to have 35 to 37% of each dollar more in your pocket. Okay. And that allows you to stay ahead of inflation. And if you're investing in these other assets that you're utilizing to stay ahead of inflation, okay, these alternative assets, whether it's business deductions, right, these 5Ds we talked about, then not only you buying back time, but you're staying ahead of inflation. And you're also being flexible to the politicians. Now, the politicians, they're going to continue to make adjustments and changes to laws, but it's not necessarily laws, it's decisions that they make that affect us. So, for example, right now, the goal is to create inflation. The goal is to actually create higher inflation because that allows the dollar to be a little more devalued is what they need, which is the gold is spiking because you have all these central banks across the world and all these countries dumping tons and tons of money into gold. But gold is not a finite resource. Gold is not a finite resource. Bitcoin is a finite resource. There's only a certain amount of Bitcoin. Land is a finite resource. There's only a certain amount of land. Okay? Gold is not a finite resource that we know of. It continues to be rediscovered, and there's tons and tons of, especially the last 5 years, since I've been doing episodes on the Asset Coach Tax Strategist YouTube channel, continually be new discoveries. Okay? So it's only finite in the sense of how does it cost to mine it? Now with gold at $4,000 an ounce, there's a lot of cash flow and the value to be able to go mine more gold. So if you increase the supply of gold, what happens to the demand, right? The price starts going down. So there's this balance. But there's also this time or this period of time that runway, if you will, that leads up to mining more. And this is the same thing in oil, right? When we're dealing with oil and gas. So why am I talking about this? Bob, it sounds like you're all over the place because you need to be aware of this now. You need to be aware of this now. There are things changing right now, not just in the United States, but around the world. There is a de-globalization that is occurring. Okay, globalization is what we've been doing for the last 2 to 3 decades, and it actually has not worked. And over this period of time, this globalization has caused certain countries like the communist country China to monopolize certain types of resources that are going to affect our ability to consume. This is what Trump and this administration is trying to warn you about without being as blunt and obvious as I am. Resources are the commodity. Resources are the weapons. Okay? And we need to be aware of that. And so with that in mind, we need to be really correlated into multiple different types of things that really the IRS, we get the better tax benefits so you have more dollars to go into these particular things. Okay. And so I just wanted to spend a few minutes just kind of giving this little testimony, if you will, and this warning or shot across the bow or refocusing or whatever the case may be, however you deem or term or feel or receive this information, you need to be very vigilant in what's happening right now. Because as the dollar is devaluing, okay, we need to be aware of this in our other assets, our physical assets. Okay. And unfortunately, most people have a lot of their wealth in the stock market. And this is not investment advice. I don't know you. Okay. But I'm just saying in general, a lot of people have their money sitting in the stock market in that liquidity. Okay. And yes, it's been going up. Okay. But it's not a physical hard asset. Okay, we need to be looking at physical hard assets to help uncorrelate. And so maybe that makes sense to create more of a diversification, uncorrelating out of that liquidity market, because it is a liquid market. And with the liquid market means that there's more people, the big guys, the players, the whales, have the ability to take their funds out. Okay, and we just saw this recently in the late last week. At the time of this recording, the market had lost, I think it was like $1.8 trillion in one day. Why? Liquidity. The people took their money out. Okay, and it wasn't you. And so you are part of that 1.8 trillion loss. Okay. Now it's starting to come back in. We're going to start seeing this more and more towards the tail end of this year and what's happening. And you just need to be aware of this. You need to understand. You need to be a little more vigilant of what this, and that doesn't mean putting your money in cash and getting out of the liquidity market. Okay. It means a rethought of structuring of your entire plan of understanding how do we use traditional businesses? How do we use alternative assets? How do we use real estate? How do we use oil and gas? How do we use gold and different minerals and resources and metals? How do we use Bitcoin? Okay, we need to be aware of these tools, these assets that are available to us, to where we're not going to be affected too much in the liquidity market. Okay, now I know a lot of people are holding on to their liquidity, their stocks, bonds, and mutual funds, ETFs, because of most of the time they've been up, and so there's no tax harvesting, there's no losses to offset the gains, and so you're just continuing to sit on more and more gains, and people aren't selling them because they're worried about the taxes. That's the whole point of my conversation here, is that you're holding on to assets because you're worried about the taxation, but what's going to actually happen is you're going to lose value in your assets. But because it's not a hard return, meaning it's just paper assets right now, it's only a paper loss, but it's still your money. Buy low, sell high. The problem is that most people aren't selling high, and therefore, because of the risk of capital gains. That's why I'm talking about you need to understand your tax strategies. You need to understand these alternative assets. You need to understand your position as an accredited investor and what's this mean to you. You need to understand your overall plan and structure of what this means. Our members at Terra Firma, we've been planning for this. The plan is designed exactly for this, and any other for this that happens. That's the whole point, because that's what the government, that's what the wealthy, this is what the IRS says to do. And so we're following those guidelines and those pathways. Okay. So you need to start looking at your situation and wondering, and this isn't fear mongering. I'm not telling you to be scared or fearful at all. Okay. I'm just telling you, you need to be aware of what's happening. Okay. And be vigilant of what that looks like, and start doing more research and being more proactive in your dollars and your value of your dollars. So hopefully this was helpful. Again, this is, really designed to kind of give you a quick little warning. The future episodes, as we go through here, we're going to go ahead and start talking about some of these things that are starting to pop up, that are coming and that are happening. We're still going to use some more visual capitalist visual charts and stuff to kind of talk about. I've been kind of gathering and hoarding some information so we can start going out with some more episodes and talking about this. But I wanted to record this episode to give you guys a little bit more understanding of what's to come. What are we going to be talking about? Why are we talking about what we are? So this isn't going to be a series, but it's going to be a focusing of content to help bring more information to you and make you more aware of what's happening as we continue going through this process. All right. So thank you so much for listening and investing your 10, 15 minutes with us. We appreciate it. If you haven't subscribed yet, please go ahead and hit the subscribe button. Give us a thumbs up to the content if you like this. If you have any comments or questions, drop those in the comment section. Until then, make it a great day.